Okay, let's talk about marginal tax rate calculation in this example. I'm going to take a annotation, maybe about that thick. Probably use green color. Alright, we're good to go. Marginal tax rate calculation is very similar to marginal cost principle we talk in cost of production. You take an average total cost and you calculate two different total costs and you see the difference between the two. That's what gives you the marginal cost of producing the extra unit. It's the same concept in marginal tax rate calculation. For example, let's say we are getting a salary of $80,000 in a job, and your average tax rate according to the IRS table, say it's about 25%. So this is very similar to the concept of average total cost. Here it is an average tax rate. So at $80,000 salary at an average tax rate of 25%, you would pay a tax of $20,000. Let's say we want to accept a job somewhere else for $100,000. It's obviously a much bigger salary. Seems like we are gaining about $20,000 in salary, right? If you look at that one, that's about $20,000 marginal salary or extra salary we are making. But at $100,000 salary, IRS says your taxes now on an average will go up to 27%. That looks like the increase is just about 2% from 25 to 27, but that's on an average. But on a marginal basis, it's a lot more than that. How do we calculate that? Well, at $80,000 salary, at an average tax rate of 25%, our total tax is $20,000. At $100,000 salary, at an average tax rate of 27%, our total tax is now $27,000. So the marginal tax, the extra tax we paid from 20 to 27 is about $7,000. So we paid $7,000 in taxes when we decided to make $20,000 in extra salary. So actually your take home is only $13,000 because you paid $7,000 in tax. So what's the marginal tax rate? Marginal tax is $7,000. Marginal tax rate is basically the $7,000 you're paying as tax divided by the marginal salary you made, which is $20,000. So on $20,000 you're paying a tax of $7,000, which is equal to 35%. So it's nowhere close to 27% we were talking about. It's way more than 27% on the incremental salary of $20,000 we made. So when you decide to take that additional $20,000 salary, you have to consider that you would be paying 35% tax. Is it still worth it? That's how you make decisions. You should make decisions at the margin, not based on average.